All right. All right. All right. Well, let's go ahead and start. So, first of all, thank you for joining me on a Saturday night. Um, I know a lot of people would want to learn about the stock market on a Saturday night. The fact that you guys are here shows your dedication to this stuff. I'm glad you're here with me. A little bit about me. I've been trading coming up on a little over a year and a half now. I've kind of come up with my own style of trading. I mainly trade supply and demand zones and Fibonacci. The Fibonacci combined with supply and demand zones and, simple candlesticks and, the price action, market structure, all that good stuff. So with that out of the way, let's go ahead and start. Today's class is going to be an intro to the Fibonacci. And just so you guys know, these classes that I'm going to be doing, they'll be every Saturday night if I can. And they're meant to build upon each other. So this is just the beginning. So let's go ahead and start. Minimize this back over here. All right, so what is the Fibonacci? In technical analysis, Fibonacci retracement levels indicate key areas where a stock might reverse or catch resistance or support. Common areas are the 0.236, the 38.2, and the 50%. Usually these occur between a swing high and a swing low. It's designed to predict the future direction of price movement. So you draw it from the swing low to the swing high. And you can see here fully catch resistance and support in between these Fibonacci levels. Any questions so far? I don't have the shot up. All right, if you have any questions, unmute yourself or just talk in the chat. So the golden zone is represented by the price area between the 50%, the 61.8, and the 78.6. These levels are watched by traders, institutions, and trading algorithms. As beginners, these are the levels that we're going to be focusing on. As you can see here, from the swing high to the swing low, price came down and retraced back up to the 786 level before catching a huge sell-off. This is where you want to go short, right? At one of these Fibonacci levels. These three are going to give you the best risk reward. Yeah, let's see here. So that's going to depend on if it's an uptrend or a downtrend, and we'll get to that. Actually, I have a slide on that. But if it's a downtrend, you're going to want to draw it from swing high to swing low because you want to get in on the trend, right? You don't want to be the one chasing these candles and getting a whack fucking contract. I'm sure we've all been there. You want to be the trader that, like, that gets other traders stop losses. You know what I mean? When other people are like, oh, we got the stop loss, it's really just, kind of the Fibonacci levels playing out. You see it here. They love to kind of make it look bullish right into a Fibonacci level. You'll see it over and over again. So again, there are a lot of levels in the Fibonacci, but we are going to be focusing on the 50%, the 61%, and the 78%. These are going to give you the best risk to reward. So let's keep going here. Cool. Let me just talk about this. And so yeah, if we're in an uptrend, you drop from the swing low to the swing high. In a downtrend, you drop from the swing high to the swing low. Again, it's a trend trading strategy. In the beginning, you don't want to use it to catch the bottom or catch the top. You just want to, you see that we're in an uptrend or a downtrend. You want to get in on the trend. You draw your Fibonacci tool and you pick it up on one of these levels. specifically the golden zone, because again, it's going to give you the best risk to reward. Oh. So we'll hop on the charts and I'll show you right quick how we do it. And I have some examples here on SPX. We'll put it on replay. All right, first candle of the day. We get this huge move up and we draw the Fibonacci from the low to the high right here. We're going to want to keep dragging the Fibonacci up until price starts to retrace. Now, we are assuming price is going to go up because we had a huge move up, right? So this is what we're expecting to happen. So we're going to want to get filled long at the 0.5, the 0.618, or the 0.786. So let's see what happens here. So right there, they bought it off the 0.786. Again, this is the best risk to reward you're going to get. You can get it off the 0.618 or the 0.5. Either of these levels will give you a good risk to reward. Aim for the 0.786 if possible, but it's not bad getting it here or here and using the previous Fibonacci level as a stop loss. Ideally, you're gonna want the swing low to be your stop loss, because that's market structure, right? That's the range that's created, right? The low and the high, that's the range. So if the range breaks, then you definitely know you're wrong. So that's why getting it at the 0.786 or one of these levels gives you the best risk to reward because it's so close to market structure breaking, right? Let's keep going. And as you can see, right off the 0.786, you could have been done for the day. You could have been done for the day right here, right? But if you had to, you know how you trade. You hold runners, and you're good to go. You could have held this all day, most likely. Oops, sorry. But yeah, I do have another example here. Let's see. So same thing here. Oh, let me check the chat, make sure. Okay. Same thing happened here, right? So we'll go ahead and put the replay on. Oh, great. I gotta find it again. Sorry. All right, right here. Put the replay on. Oh, hold on, I got something in the chat. So do we get the trade in the golden zone? Yes, exactly. You're gonna want to give yourself the best risk to reward ratio. You're always gonna want to get it in the golden zone, which is the 0.5, the 0.618, and the 0.786. And if you guys need these settings, it's posted in the supply and demand chat. Do you draw the fib from the beginning of the day, or do you keep trying different ones throughout the day? So that is going to be, there are several Fibonacci strategies. That is one of them. That's actually the one that I use. But I'm going to go over a different one a little bit later. So just wanted to show you this real quick, and we will get to that tip, no worries. So again, and this is the 5-minute time frame. I'm just showing it. I normally trade on the 3-minute time frame, but for drawing swing lows and swing highs, I like to just keep on the 5-minute on the side just to see what the swing low and swing high is. So again, what's going to happen is the 6:30 candle will pop up. No, this is 7 o'clock candle. The swing low gets put in, the swing high gets put in. Right away, because we made a move to the upside, you're expecting price to go up, right? So instead of thinking this right here is the sell off that's gonna fucking, kill the market, you are actually looking to get in long because price is going up, right? So you want to get in where you get the best risk to reward. Again, it's gonna be the 0.5, the 0.618, or the 0.786. And in this case, it ended up being, let's see, they bought it right here up to 0.618. Right here, you could have been done for the day, right? Oh, let's move the chat here. Yeah, I highly agree. I like seeing how the candles play out as well. That's actually how I trade on the 3 minute. I watch the candles live and I get in on the wicks. So yeah, I might get in on Thinkorswim because I like watching the candles replay. But yeah, as you can see, the 0.618 ended up paying, and you could have been done. This bounce off the 0.618 happened at 7:20 in the morning, so it required you to be patient, right? This is a patient person's strategy, right? You're not chasing this. You're not chasing any of this. You're being patient. What you're doing is right off the bat, you're drawing from swing low to swing high until price comes down to one of your price targets for you to get in long because you're expecting price to go up. The market is telling you we're going up, right? So you get it off one of these levels. Your stop loss can be your previous Fibonacci level if you want. Ideally, it'll be the swing low because that's going to prove you wrong. Again, I know everybody's risk tolerance is different. Um, so it's going to be up to you where you place your stop loss. But again, this is going to be the best risk to reward, especially on a trending day. Let me try here. Absolutely. I'll start right there. Start right there. All right. I'm not watching for. I guess you could say. I guess you could say it's a reversal. I guess you could say a reversal. It's more of hopping on the trend. I'm expecting the sell off to reverse right there and the trend to continue. Bill, if that makes sense. Because that uptrend, that pullback, that's just profit taking. It's not the end of the world. It's not the dump. It's just profit taking. And the best place to get in is going to be one of those levels. And that is where normally it reverses. And then you can, get with the trend and take it long. All right, so let's keep going here. So that was a live charting example. Sorry. So how to trade the Fibonacci, which is the fun part. Again, there's going to be several ways to use the Fibonacci from scalping to swing trading. There really is something for everybody. Currently, I am in a lead that I'm using the Fibonacci on, and I'll show it to you. And again, you can use it to scalp. I normally use it to scalp. Um, but first and foremost, the Fibonacci is a trend trading style. Oops, sorry. Um, Yeah, first and foremost, yeah, it is a trend trading strategy. It's not, at least in the beginning, it's not for you to like catch the market reversal or the top or the bottom. So actually, I will get into that. I will get into that. So when you reset the fib, like when the trade goes against you. Yeah, exactly. Yeah, so that we do get into that, but essentially, real quick. So say that you are going long, but the swing low breaks, your stop loss kicks in. From there, reverse the Fibonacci. Reverse it from an uptrend to a downtrend. So draw it from the swing high to the swing low that broke that uptrend and wait for it to come back to the 0.5, 0.618, 0.786. And then get in on the downtrend, the new downtrend. You know what I mean? You see what I'm saying? So if we're in an uptrend, you get in and the Fibonacci fails, you get in on the next downtrend because if the Fibonacci fails, then market structure has failed. You're drawing it from a swing low to a swing high. That's a range. That's market structure. If that range breaks, then that Fibonacci is proven wrong. That market structure is proven wrong. So from there, you draw the Fibonacci from the swing high to the swing low and get in short. Don't chase the move down. Wait for it to reverse up until the Fibonacci levels, and you'll start seeing, depending on what you trade on the 1 minute, 3 minute, like you'll start seeing evening stars, things of that nature on a Fibonacci level, and that's when you get in short. And I'll show you an example of that as well on the chart. In fact, I'll show you a trade. I'll show you a trade that I took that my long Fibonacci was proven wrong twice, and then I got in short, and it erased my losses, and I made a really nice profit. So I'll show it to you after this little presentation. If I forget, just remind me. So let's keep going. Oh, so as far as today's trading strategy, we're going to be focusing on the full range Fibonacci. What that means is just drawing it from the daily swing high to the daily swing low, the daily range. And we're going to be focusing on the daily golden zone levels. Sorry, we don't do. So again, we're going to be focusing on the golden zone levels on the daily golden zone levels, because when they break or hold, that's a big deal. That means you did catch the reversal of the day, or you caught the best trade of the day to the downside or the upside. I think the next thing is going to be, okay, so I should have went to this slide first. So the first thing you're going to do is identify the trend and draw a Fibonacci from the swing low to the swing high if we're in an uptrend. And again, if we're in a downtrend, draw from the swing high to the swing low, and wait for price to retrace to the golden zone. You need to trust that it will. At this point, once price gets to a golden zone, you're going to use your existing knowledge of candlesticks and price action to determine where to go long or short at. At the 0.5, at the 0.618, if you see rejections at the 0.5, get in. If you see that we're blasting the 0.5, just wait, see what happens to the 0.618. And, if we start getting, bearish candlesticks there, then, maybe go ahead and get short there. So again, you take a position, set your stop at any previous Fibonacci level you're comfortable with. That's why I say getting into 0.786 is the best, because then your stop loss is going to be the swing low, and it's going to be the best risk to reward. Again, ideally your stop loss will be that swing low or swing high, but everyone's risk tolerance is different. If you get in at the 0.5, you might not want to wait for that swing low to break, just because your risk tolerance. Just keep this mindset when you're trading the Fibonacci. You're getting in on the trend and you're looking to buy the dip. Whether the trend is upwards, you're expecting the trend to continue and you want to buy the dip. You want to buy the dip at the best levels possible. That's going to be the 0.5, the 0.618, or the 0.786. Oh, so I put an example right here. So this is SPX. Here's the first candle of the day. So this is the swing low and the swing high of the day. As you can see, this swing low and swing high, it never broke the entire day. So this is the daily swing low and swing high. Now watch this. You come down to 0.618. You get filled long, and here's your stop loss. It's a risky stop loss. I say that because it can come down and the 0.786 can get filled and you can get stopped out. So the safest stop again is going to be that swing low, and there's going to be a point where you kind of got to accept the risk. That's why I don't trade zero dates. I trade SPY next dates, or SPX zero dates when we have really good price action. When we have really good price action, I'll play some SPX. But I normally stick to SPY 1 dates because, if my swing low does break, then it's normally like a 25-30% loss. It's not that big of a deal. So yeah. So you get filled at the 0.618. Look at that. No red candles the whole way up. And as soon as you put in that evening star, you should be out of the trade, right? I mean, you could have taken profit on any of these green candles and they're good, especially on SPX, right? Um, so again, here we go again. We come down again. We don't move the Fibonacci because the swing low and the swing high, it never broke. You see that? It never really broke. We put a wick in, but it didn't really break, right? So we're coming down, we're coming down, we're coming down. Look at this. The 0.618 was where they bought it out. Here's a nice little scalp, right? Bam, bam. That's how you can scalp that. And I'll scalp these all day. Like I'm a scalper. I pretty much accepted that. And so yeah, I'll scalp these all day. I don't care. Um, so here we catch another bounce off the 0.618 and it doesn't really do anything. And here is that magic 0.786 level that I keep talking about. Again, this ends up being the best trade of the day because look at that. From the 0.786, it just ran up. It just ran up the entire day. Um, it's amazing. So any questions about that? Or any questions? Because I after this, I believe it's just a live charting example. So okay, sounds good. What time frame? This is the 3 minute. I trade on the 3 minute. So you can again, since this is the daily fib, it doesn't really matter what time frame you draw this one on because you're just looking for the swing low and the swing high of the day. You're gonna keep moving it as that changes throughout the day, right? So like here, well actually what's going on? We're hopping the chart right now. Yep, we're hopping on the chart right now. I'll show it to you right now. All right. Um, all right. And I know I have some examples laid out for you somewhere. Huh? Is this the one or not this one? Let me just show this one. Let me just show this one. So this one, these two actually. Okay. So go right here. I wonder. Shit, let's see. Okay, cool. Perfect. Absolutely perfect. All right. Mm, all right. So right here, this is the price action is going to start right up here, right? Here. Here we go. Oh, it actually started over here. Okay. So here we go. Let me just go ahead and delete that. Here's a 630 candle, and we're making a move down. So I'm going to draw my Fibonacci from the high to the low and just watch price action. So there's actually a nice little, I didn't even notice that. So that's actually a nice little tag off the 0.5. That's a nice little scalp if you want to take it right off the morning. Again, I would scalp that around all day because especially in the morning. I'm scalping that all day in the morning. Let's keep going. Okay, so right here, look what happened. You see this swing low broke. We put a body underneath the swing low. So I'm going to drag my Fibonacci down to the new swing low and watch it some more. See how that's kind of crazy. See how we put in this little bearish candle here at the 0.5? That's pretty cool. But that 0.786 ended up being the best entry. So again, the 0.5 is a good entry. So let's see what happens. If you make your stop the swing high, see what happens. They end up so this is a good entry. You would have to sit this and pull back and just trust that it's not going to break the 786 or the swing high. But the best entry ends up being the 0.786, right? So we haven't made a new swing low yet, so I'm not gonna move my Fibonacci, but we are, I got it extended. So I'm just gonna extend it, make sure I capture all the price action of the day. And again, see, this 786 ends up being another great short opportunity. Again, this is the daily 786, right? It's the daily level. It's not like off of this one. It's the daily 786. So it's a big level. It's a big level to break a hold. Let's keep going here and see what happens. So I'm extending it. I'm extending it. So right here is when I would put this Fibonacci to bed because this swing high broke. This downtrend is now broken. And what I would do is look for the latest swing low and the new swing high. And I would start looking long because market structure has officially broken. This is the market telling you that I want to go up now. So let's go ahead and join the party and draw from swing low to swing high now and go ahead and get our win and see what happens. See if we even can. 0.618, I would scalp this. I would scalp that all day. I would probably get scared out right there when that candle got printed. Let's see what happens. Go ahead and extend it. Oops. So right away, if you went ahead and grabbed a position on this 0.618, you're already paid pretty well. And we broke this. Oh no, we haven't broken it all the way yet. We're getting there. Let's go ahead and see what happens. Oh, this is the end of the day actually. Yeah, 1300. So you could have played this Fibonacci short all day and then flipped around and got that nice little end of the day play right there, right? Really nice. From 1150, you could have rode that almost the entire power hour. All right. Let's see here. So me personally, I am looking for we'll see what happens if I switch to 3 minute real quick. So we'll go ahead and do how I would trade this. Man, I wish I could replay the candles because I kind of exactly what BOC said. So the way I do it is I personally like to watch the 3 minute candle form, and if I start seeing, I'll see if I can find a way to do it here. I wish I could just like do a whole candlestick replay. Let's see here. The price action is about to appear. And this is the 3 minute. This is the 3 minute time frame now. I'm gonna try to play it like how I would trade it. Let's see. I believe I just did a 5 minute time frame because it isn't as volatile as a 3 minute. Fib only impulse move and long candles, right? That is my way of trading it. This is a different trading strategy. This is the full range. This is the full range. So this Fibonacci, you're looking to capture the entire day's range. My way of doing it is this is another Fibonacci strategy. I draw it on every impulse move. But this one is specifically the full range Fibonacci strategy. Again, if you're a beginner, we will get to my strategies because they're all pretty fire. But yeah, no problem. Yeah, they're all pretty fire. But yeah, this one I do recommend you guys try this one or paper trade it because this is a good beginner Fibonacci strategy. So we're drawing the swing high for the swing low. And we're waiting for a retracement to go short, and it doesn't come right away. So again, can't be impatient. Just wait. You keep drawing it out. You're just waiting. Let's go ahead and extend it. So we're making a new swing low. So I'll extend it down, and again, so right here, this is where I would get in. I know this looks bullish, but on the 30-minute time frame, if I'm watching it on the 0.6, if I'm watching it and I see this huge selling wick, um, and if I see the speed of the selling wick, if the candle is going up really fast or going up and getting smashed down really fast, that's telling me that there's a lot of sellers here at the 0.618. So I personally would get in, even though this does look somewhat bullish. I see this selling wick come in, and if I see the selling wick appear quickly over and over, I personally get in. So that's my trading strategy. Um, so for this strategy, this is I do wait for the first swing low and swing high to get put in before I draw this. So I wouldn't draw this one until like right here when we start like really retracing, we really start putting in a new swing low. Like right here, we start like right here, we put in a new one, and then we put in a new one, and then like that. Um, there are ways to use the Fibonacci levels, the prior days Fibonacci levels, and I'll show that in a future class because I do plot previous days Fibonacci levels, but I'll show you exactly which ones, and I'll show you how I do them. That's a whole secret. That's a whole secret sauce in itself. I will show you guys how to do that though, so no worries. We'll keep going here. Again, I would get in right here at the 0.618, and I'm scout. Oh my god. Again, I'm scalping, so I'm probably already. I would be out on this huge candle. I mean, I'd probably be down out on these huge candles to be honest. So again, I'm a scalper. Um, but look how much you can look how far you can take this. We end up making a new swing low, and again, we're extending it as we keep making new swing lows. We're extending the Fibonacci, and we're dragging it down because we keep making new swing lows. We're just watching. We're watching. See what happens. Extend the Fibonacci. So see this 3-minute candle did not present any bearishness. Man, I really wish I could watch these candles live. Yes, exactly. So I will get into it, but this is not, yeah, you need to have all that stuff. You need to have all that stuff marked. This is not a strategy on its own. I am personally a supply and demand trader. I didn't want to, give you guys information overload, but I normally have all these zones and stuff where I know where all my support and resistances are. I know where all the important areas of the chart are. So please don't take this as a strategy all in itself. You need to have all that stuff. It needs to complement your existing strategies. Um, so again, look at that. We got two tags of the 0.618 on this 3-minute time frame here. You see that? Again, my stop would be up here. If this was SPX, my stop would definitely be at the 0.786 personally, because this is SPX 0 dates, so I'm not fucking with it. When I play SPX 0 dates personally on a 3-minute, I'm looking to get my move, immediately. I'm looking to get in on these wicks. Like these wicks are my entries, no matter what. I don't get in on the bodies ever. It needs to be on these wicks. And on the 3-minute, I like to watch them form. Um, it's not as fast as it looks here on the replay. On the 3-minute, it's a lot slower. You can really see these wicks form, and you can see in the speed in which they form. Like you see this candlestick push up and then push down immediately. Like that tells you there's a lot of sellers there. And if it goes up slowly and then it's pushed down again immediately, like that's telling me over and over that like there's strong sellers here. So I look at the speed at which the wicks form. Um, things of that nature. So let's keep going here. And again, I'm filled short again here. I was filled short again here, and I would be out of the trade by now for sure. But I'd be looking to get back in at these levels. Again, I would be short here, and I do believe I would probably be out by now. And I think we're about to put in a new swing high. Yeah. So at this point, this fib is done for because we put in a new swing high. See, we put in a new swing high. So again, let's see if we can join the party to the upside. I'm not sure if we can. I didn't. Oh, let's see. So the swing high broke around this area. So let's draw it from here to here. And we never got a fill. So we draw to, oops, we'll draw to the new swing high. And it looks like we might get a fill. Let's see. So I would get in here, probably this candle right here. Um, and then if I get it on the 0.786, I'm gonna make my stop the swing low. This to me is the best risk to reward, the 786, and the next stop is the swing low, right? This is proving that your market structure is not broken, right? Because this is the range of this market structure. If this breaks, this market structure is broken. Um, so that's the best, in my opinion, the best risk to reward is to get it as close to here as possible. The 0.786 is a really good area, but these are not bad areas either. They're really not. The 618 and 0.5 are great areas to get in, and to make this swing low your stop loss, or previous Fibonacci level depending on your risk tolerance. So let's keep going here. Oh, and we ended up gapping up the next day. So off this 0.6, I guess he could have swinged it. I didn't notice this. So off this 0.618 of the previous day, we ended up gapping up. So that's how strong the golden zone is. Um, we closed at the 0.786 level and we gapped up. Ridiculous. I didn't I didn't notice that. That's pretty cool. That's really strong. Again, this is showing you the power of this 0.786 level. I think that's it. So any questions before I keep going? Let's see here. I'm checking the chat. Nothing here. All right. So go ahead and keep going. And let me do some trade recaps too. I don't want to forget that. Okay, slide. Oh, so we're coming to the end here. So these are frequently asked questions. I get these questions a lot. Um, so how do I know what level to get in? Again, this is going to come down to your own. Oh, did I miss where he said where the golden zone is? So I'll go back real quick. I don't want you to miss this. I'll go back to that. I'll go back to that slide. I don't want you to miss this because that's the whole point of this one, pretty much. So the golden zone is going to be represented by the area between the 786, the 618, and the 0.5. These are going to be the best levels for you to get your best risk to reward. These levels are watched by other traders, institutions, and most importantly, trading algorithms. Sorry. When you see these big candles appear out of nowhere, that's normally because of the algorithms. Um, you see, we look really bullish all the way up to this 0.786 level. This is where I would get in because this is not a bullish candle in an uptrend. I know it looks like it, but in an uptrend, that's a candle that's telling me that the bulls could not keep this momentum up. Um, they could not. This is a really small body and a lot of wick, so that's telling me that we couldn't keep it going here. So at an uptrend, this is a bearish candle. But as you can see, they really listen. Yeah, absolutely no problem. Absolutely no problem. This is going to be your best risk to reward, as you can see here. You can grab it here, here, here. Even if you don't grab it here, you can grab it here and be good. You can grab it here and be good, and it's going to give you the best risk to reward. Let me go back to that slide. We're coming to the end here, and I'll go over that trade where I lost and then used the short to make a fast. So how do I know what level to get in? Again, this is going to come down to your own skill as a trader, and that's what we're all here for at MSC, to develop as traders. So we are going to get better together. That's what I'm here for. We're going to understand these candlesticks better together. If you have any questions on candlesticks or anything of that nature, feel free to ask me. I mean, I'm down to the point where I have favorite candlesticks and favorite candlestick patterns. So I love candlesticks. So, how do you know what level to get in? Let's say a morning star appears in a downtrend on the 0.6 feet. Ooh, sorry about that. It's really windy here. So, for example, a morning star appears on the 0.618 retracement in a downtrend. Like we're in an uptrend, right? And we come down, and a morning star appears in the 0.618 retracement. I'm normally in. Or let's say we get a tweezer top on the 1 minute on the 50% retracement. That's telling you that there's sellers there, right? That's a bearish candlestick pattern. So that's a good place to get in. Or we get a failure to make a new swing high right at the 0.786. Again, this is a market structure strategy. When you draw your Fibonacci from swing low to swing high, that's the range of that market structure. So if that market structure breaks, then you're wrong, right? But if we fail to create a new high right at the 0.786 level, I'm getting in, right? And you should get in too, because that's telling me that we just failed to make a new high. Let's see here. So again, the uptrend or downtrend has ended and the Fibonacci has become invalidated. I just showed you guys this on the chart, and I'll show you guys again in my trade recap how I did it. But again, just like any other strategy, the Fibonacci doesn't have a 100% win rate, but its success rate is very high, as I showed you guys on the chart. And I've been trading it for a long time now, and I really can't imagine myself without it now. It's completely erased the FOMO from my psyche, because I used to be like, oh, I'm never going to get in on this move. I'm never going to get in on this move. But now I can sit patiently, draw my Fibonacci from low to high, and just trust it's going to come and pull back to those levels, and market structure it's not going to invalidate. There's going to be a lot of bears right there that are thinking, oh, we're finally going to dump. But in actuality, they're about to get stopped out because we just touched a 786. You know what I mean? So you want to be that trader, right? You want to be the trader that's like, I'm getting in on the 786 because we're not dumping. We're just pulling back. It's just healthy profit taking. But if that Fibonacci breaks, I don't know where I kind of went off on a tangent. If the Fibonacci breaks, say the uptrend breaks, you just drop from the new swing low to swing high, or vice versa, right? And again, is this the only strategy that I use? That's absolutely not. I'm primarily a supply and demand trader, and the Fibonacci complements my trading style absolutely perfectly. They go hand in hand, and I do believe that it will go hand in hand with your existing strategies as well. When you use your existing strategies and use the Fibonacci together with it really, it becomes something magical. You really start seeing these really picture perfect trades right off these levels. Say you use an EMA cross and you see an EMA cross right at the 786, and you're like, wow, I'm getting in, So don't make it your primary strategy, although you can, because it is just a price action strategy when it comes down to it. So you can, but it really helps when you have like an existing strategy. Like I said, I know where all the important parts of my chart are. I know where the important daily levels are. I know where my supply and demand zones are. I know where my golden zones are. Like I know where all these important areas are on my chart. So when I add the Fibonacci, it becomes something like truly magical. Like it's beautiful to me. Like it's just picture perfect. When you guys see like the trades I drop, to me, they're picture perfect. They're like chef's kiss. I love them. So we come to the conclusion. After this, I will go over my trading cap. Let's see. this is a very powerful tool that if you use it responsibly, it's going to boost your consistency and it's going to help you grow as a trader. It gets rid of your FOMO and teaches you not to chase every candle and instead just wait for those pullbacks. Um, I used to be there. I used to, chase every candle and like think that I'm not going to catch a move. But ever since I started using these Fibonacci's, like it's gone. It's just gone. I just trust that it's going to work. Um, sorry, I drank all this tea. The Fibonacci is a trend trading strategy. I'm going to say this a lot, especially as a beginner. You don't want to use this to call the top or bottom of a trading day, because it's a trend trading strategy, right? If we're in an uptrend, that swing low hasn't broken. If we're in a downtrend, that swing high isn't. So you're looking to get in on the trend. Don't use it to call the top or bottom. But I have some secret stuff. We're gonna get to it. You can use it to call the top or bottom, but as a beginner, just get with the trend. The golden zone is your best friend. As a beginner to the Fibonacci, I want you to focus on these three levels. They're going to give you the best risk to reward. The 0.5, the 0.618, and the 0.786. Those are going to be your best friends. The closer you get to the 786, it's going to give you best risk to reward. Honestly, the closer you get to the golden zone, that's going to be your best risk to reward. Because their swing low is really close to you. You're going to limit your losses. And I think that's it. Yeah. Thank you for your time. Is there any questions before I go over to my trade recap? All right, cool. I'm gonna head on over to TradingView now, and I'll show you where it was actually yesterday's, not yesterday's, 2 days ago. I don't know, the last trading day. This trading day was really frustrating for me. Also over here. And I'll have my indicators on here. I don't know. Oh, these are for when I have my alerts on. Hold on. Let's take these off. Oh my god, this is funny. Okay, whatever. Oh, that's the current price. Okay, so it was this day right here. With the chart here. Thank you. I really appreciate it. Highly appreciate it. Wow. Now that I'm looking at this even more, I'm really smacking myself in the head. But you guys can laugh with me. All right, so here we go. We're gonna do a replay of the last trading day. I'm really, I'm really kicking myself now, man. I'm really kicking myself now. Thank you. I really appreciate it. Again, this is just the beginning. These classes, I'm kind of designing them to build upon themselves. So each one is going to be building upon the knowledge that you've learned in the previous one. So this will give you about a week to paper trade, do what you do, see how you like it, this and that. So let's go, let's go ahead. The more I look at this, the more I'm like, why you dummy? Okay, here we go. Here's the first candle of the day. No, look. Thank you. And yes, it's recorded. I'll drop it. It's recorded. All right. I was looking at this more. I'm like, wow, why did you do that? Okay, here we go. And let me make sure I have the right. Let me make sure I have the right template. So this is my settings. It's gonna look a little bit different. We're gonna go over my settings stuff in a different class. One more thing in the chat. Again, thank you. I appreciate it. The next class will be next Saturday. It's just gonna build upon this stuff, guys. This is you're gonna love it. So let's go ahead and start here. This is Friday, right? Yeah, because I was here. So I didn't actually I wasn't looking at SPY at this point. I was actually trading Google at this point. Um, And I won on Google too, so don't worry about that. That was an easy one. Um, let's see. No, you don't have to, but I'm gonna be doing more supply and demand classes. This Fibonacci is this one I decided to make sure it works with their existing strategies. But I will be doing a supply and demand class. But I do also have supply and demand classes on my YouTube. Um, but I do think since then I've got a lot better at it. So I think you're gonna want to be looking forward to my next class even more. Again, it's on the YouTube if you guys want to see how I draw my zones and stuff. But my next class on drawing zones, it's gonna be a lot better. Not to say that one sucks or anything, but like if you think that one's good, wait till you see this. Wait till you see the next one. Okay, one second. Let me drop it. Let me drop it. I'm gonna drop my YouTube link. Let's see. Let's see here. Does this strategy work on other stocks? So I'll actually show you. It does work on other stocks, but I'll show you. We actually went over this earlier today. This is you actually, you know what? You gave me a really good idea. I'm gonna show you something too. Don't let me forget Racy. I want to show you something. Um, so let me just make sure. Um, YouTube your channel. Here we go. Copy. So this will be updated more. Um, let me drop in the chat now. This will be updated more. Like with this class and stuff, I'll be making it a little bit better. Um, so let's go ahead and start. Oh, so I'm drawing the Fibonacci. And let me go back a little bit. This is too far now. Okay. So at this point, I'm done with Google. I scalped that off the morning. Um, so I'm drawing my Fibonacci from swing low to swing high, and I'm expecting us to keep going up because we're in an uptrend. All right, right here. Sorry, right here. I'm expecting them to buy it off the 0.5, but they don't. They they just don't. So I drag it up. Oh, I'm pretty sure I did it again. Again, they did it again. They bar off the 0.236 level. They didn't come down, and I didn't get filled. So I didn't get filled here, and I didn't get filled here. At this point, I'm getting kind of frustrated. So I'm like, whatever. It has my back. This and that. Let's go. Again, they did it. They did it again. They bought off the 0.236 level. You see that? They did it again. So I'm like, okay. And at this point, I'm like, come on, man. Let me get my freaking, let me get. Oh, see, I'm sorry. So right here, once the new swing high got put in, it came down, put in this hammer at the 0.236, and I'm like, oh, come on, let me, I want to get on this trend. It's not coming down to 0.5. And then really, at this point, I should have just got with a party, and I should have just been like, okay, they're buying out the 0.236. I should too. But, you know how it is. You know how it is. So right here, I'm dragging it up, and I'm like, okay, finally, we're finally going to get my point 0.5. I'm finally going to get my point 0.5 fill, this and that. And again, I started getting really excited because I'm seeing this bearish candles. I'm like, all right, here we go. It's go time. I'm about to go long off this. I don't know what I was thinking because we're in a zone. We're at this volume shelf, and this is a really huge volume shelf. I'll explain volume shelves. So I'm seeing all this resistance. I'm seeing all these bearish candles into resistance, but my mind is focused on going long because I'm so frustrated at this point that I didn't get in here, and I didn't get in here, and I didn't get in here. So I get in right here, the 0.5, um, and I went up like 5-10%. I set my stop at even, and instantly, like I see percentages coming in, and instantly I get stopped out, and I'm pretty sure um It must have. It skipped my stop for some reason. It really did. I don't know what happened there. It did skip it by much, but you know, it's still really frustrating. Um, so I'm like, fine, whatever. And I buy it again right here off this 0.618. And again, I'm like, all right, here we go. You know, I'm getting good profits. And at this point, I should have, I should have been really, scalping like I should, but I set my stop at break even a little bit too close. Um, yeah, I wasn't taking profits like I should have. Here we go. And at this point, I get stopped out a little bit. At this point, I get stopped out a little bit below, a little bit above break even. I'm just at this point, I'm just like, okay, fine. Uh, fine. And now, in hindsight, I should have known that the market wanted to go down because this is an impulse move down. And you see these 3 minute candles breaking support like it's not even there. Like these are the logical areas of support, and like the 3 minute candles are just engulfing them like it's nobody's business. So what I should have started doing as soon as market structure started breaking, which is right here, market structure started breaking right here because this swing low started breaking. You see this? This is a broken market structure. You see that? Broken. So what I should have been doing is drawing my fib from the new swing high to the new swing low and watch what happens. Bam, tear off the 0.618. But at this point I wasn't in. I got in right there. I got into the 0.786. Again, to me, I'm not sure, but this is a bearish candle in an uptrend because, and this happened twice. I remember it too. Like, um, the Bulls just couldn't. They can't keep they're not able to keep this momentum going. Like they're strong right here, and then they get stuffed right here, stuffed again. Not only that, this is an inside bar, so that's also more confluence. Once that inside bar breaks, you could take that, and then bam. Not only that, I had my volume shelf right there. So this, I was frustrated here, but I started thinking clearly here. I'm like, we're at resistance. I have these two bearish candles. We're at my volume shelf. I'm in, and then I was able to take it all the way down here. I sold here at the 0.5 extension. It kept going, but it ended up reversing right there, I believe. Let's see. So I think I had a good exit, even though I could have kept going here. Let's see. No, no, I should have held that. I think we ended up downtrending all day for that. Let's just see. I'm curious. Let's go ahead and drag it to the new swing or I could just use the extended. I'm just curious. I want to see this. And then we do start reversing. Yeah, and then we start reversing. Okay. So yeah. Um, again, that's just I just wanted to show you guys the Fibonacci failing for me. But I was able to clear my head real quick, draw the short Fibonacci and get my money. I was able to erase my two. I was able to erase losses if I had incurred any, and make a really nice profit on this ride down. Um, and then I was done trading for the day. I think I may have overtraded. I don't know. All right, dang, I'm watching this price action now. I'm like, why did I think why did I go long here? I'm just so frustrated here and here not being able to get in, and then I'm just ignoring all this stuff happening. I'm ignoring this market structure rate. Um, that's all. I was still able to end the day clean. It's whatever. I It happens. It happens with the best of us. I just wanted to show you guys. It'll fail on you sometimes, but all in all, it has a really high. Yeah, yeah. We thought it was a trending day because that's what we had this entire time. So, it's not a big deal. It's not a big deal. It happens. Um, so race C, you brought up a really good question, and I went over this earlier today. Does this strategy work on other stocks? So, yeah, this strategy works on every stock, I believe. Um, but you don't want to use it intraday if that specific stock doesn't have a good ATR. I want to bring up Neo. I don't know if the person I had the chat with is here, but if you are, unmute yourself or if you want. So I talked about this with them. I wouldn't use it on something like Neo because its ATR is all the extra lines. So that stuff, I just yeah, that's gonna be in a separate class. The extensions, all the extra levels. At this point, just focus on the golden zone. And the next class, I'm gonna be going on over the next levels. And probably the extensions as well. But right now, I want you guys to just focus on the golden zone. It's gonna, you know, there's many strategies to this. I have my settings in the supply and demand chat if you want to set it yourself and just kind of mess around with it and see how price reacts to each level. But how to use each level, we're gonna go over that in a separate class. So let me just answer this question for Racy real quick. So Racy, I would not use this on something like Neo because let me find here the strategy. So as you can see, it only has an ATR, that's the average true range, of 50 cents a day. There's nothing I can do with that intraday. Absolutely, it's not going to work. But that's not to say it doesn't work. Use it here on the daily chart because there's Fibonacci's on every single chart. And what I would do, let's see here. Couldn't unmute. I'm sorry if you kind of. I must have messed up the settings. But next class I won't mess them up, and we'll be able to talk. So Neo. Let's see here. So I would draw the Fibonacci. I see that we're downtrending. Let's get on the chat here. I won't. I will. I'll show you guys the lead. I'll show you guys the lead. It's Alibaba. So let's see here. Here's Neo on the daily. There's lots of ways you can do this. I personally would do it this way. I see that we're in a downtrend, so I'm gonna take my Fibonacci again. This is the daily chart, and I'm gonna draw it like that on the daily chart from the swing high to the swing low, and you see that we couldn't break this. We put in this wick this day. Couldn't break the 76. Couldn't break the 86. Couldn't break any of these levels. So that's how I would play on the daily. But let me show you this. Say you're not playing this swing low, or you're not playing this swing high to swing low. You're playing this swing high to this swing low instead. Again, this is the daily chart. Swing high, swing low. You see right here, 0.5. You're expecting it to go down. You can put in the swing trade right there, and you're good. Again, rejected, and you're good. So that's how I would play it on different charts, on different tickers. You just got to understand the ticker. Something like me or something that moves really slowly, you don't want to use it intraday. You want to stick to you know stocks that move like $3-4 a day. Like Google is a really good one. It has an average true range of $3 a day. It's in the tech sector, and it's kind of a slow mover for being in tech. So it's really good, and the contracts are pretty good. We can use it on something like Netflix and Meta. Um, let's see, Amazon, obviously. Like these are the ones I'm pretty much just play SPY now, but I keep an eye on this. But let's here. I can see a really good one on Meta right here. Let me just so obviously we know Meta moves a lot. So you just draw it from swing low to swing high. Boom, there's your fill, and you're good to go. And it looks like, let's just extend this. This is, yeah, oh yeah, volume kind of slowed. I mean, look, you could have played it all day, but really the best fill was right here. if you miss this move. I remember the last trading day we had really good volume in the beginning and they kind of rug pulled it, so latest candles were kind of weak there. Wow. So here's another one. Swing low, swing high, fill up the 0.618, and boom, off to the races, right? So things like big caps, things like that. But on smaller stuff, you're gonna want to just stick to a higher time frame, so the 4 hour, daily, weekly, 1 hour even. If you're playing something like XLF, XLE, XLK, one of these slower movers. Um, and then I'll show you my leap too. I'm actually playing this one on the weekly. And I'm playing this swing low and this swing high. And my stop, I'll show you right here. And this is the weekly chart. This is the weekly chart. This is where I took position because we had kind of tweezer bottoms here on the weekly. Not only that, but we're holding the 0.618. So my stop loss is a failure of this 0.618. And I think I'm gonna go down to this demand zone because I charted out some Alibaba. So I think this will end up being my stop right there. And the extension tells me that I have room all the way to 150 with time. So I'm gonna go ahead. I have the leap. It's doing pretty good. Alibaba's been ripping lately, but now it's kind of consolidating. It looks good to me. We do have this. Oh yeah, we do have kind of a triple top here going on. But I think we just crossed as well. We just crossed on the daily. Yeah, we're good. I'm good on this. I have a really good stop. Yeah, I'm good. So yeah, that's my leap. I'm playing it on the weekly. I'm keeping an eye on the daily. I have my stop and all that good stuff. So again, that's just playing the Fibonacci and my supply and demand levels on a higher time frame and just letting it work. Um, let's Tesla with the card. It's just ripping. Here's Tesla on the weekly. Say you want to swing something like Tesla and you're playing this swing low and this swing high. That's the best set it and forget it swing I've ever seen in my life. You see this hammer candle get put in not only on the price 5 and this demand zone, and you're good. Your profit target at this point, if you get it right here, is 275. That is 157. That's the best risk to reward you're gonna get. So as you can see, it works on every time frame. There's Fibonacci's on every single time frame out here trying to make some money. Um, so use it to your advantage. Intraday, swing trader, scalper, all that stuff. It's here for you. With that, I believe, I don't have I believe that's it. There's nothing else. Let me just check the chat, make sure we're all good. All right. So if there's not any more questions, this is going to be recorded. It'll be dropped in the Discord for sure. All right, last question, last chat, or I'm sorry, last call questions. And all right, everybody, have a good one. If you have any questions, just DM me. My DMs are always open. I'm Ross710, and then all the settings for the Fibonacci, they're in the supply and demand chat pin. So if you want to play with it, it's all there for you. All right, have a good one, everybody. Out of here. Good night. Have a good one. Yeah, no problem, everybody. Have a good one.